while retail investors were panic selling. The biggest banks in the world just finished their largest accumulation phase in history. Today is April 18, 2026, and the window for true financial independence is closing. Let that sink in. For years, mainstream finance mocked digital assets, called them speculative, dangerous, worthless. But behind closed doors, something changed. Quietly, systematically, aggressively. They didn't fight the system anymore. They took control of it. And now, the same institutions that told you to stay away are positioning themselves to own the very future you're still trying to understand. This is not a theory. This is the great institutional flip. Segment 1. The institutional trap. Let's break this down. For over a decade, Wall Street rejected crypto publicly, but studied it privately. And now, they've found the perfect strategy. Not to fight it, not to ban it, but to absorb it. Here's how. ETFs, exchange-traded funds, private custodial services, institutional-grade wallets controlled by banks. This is the shift. Instead of you owning your digital assets, you're being encouraged to own a version of them through institutions. That changes everything, because when you buy through an ETF, you don't own the asset, you own exposure, and exposure can be controlled, paused, restricted, repriced. The system didn't reject crypto, it redesigned it to fit inside their control structure, and most people didn't even notice. Segment 2. Tokenization of everything. Now, here's where it gets bigger, much bigger. We are entering the era of tokenization. Real estate, gold, stocks, bonds, everything is being converted into digital tokens. Why? Because tokens can move faster, trade 24/7, and be divided into smaller pieces. That means a building in New York can be owned globally. Gold can be traded instantly without physical delivery. Assets become liquid, always. Sounds efficient, right? It is. But there's a deeper implication. When everything becomes a token, the traditional banking system doesn't disappear. It evolves into the infrastructure layer. Banks no longer just hold money. They control access, liquidity, settlement, and most importantly, permission. This is the real flip. From gatekeepers of cash to gatekeepers of digital ownership itself. Segment 3. The self-custody. Warning. No, we need to talk about risk, because this is where most investors are dangerously exposed. If your assets are sitting on an exchange, you do not control them. Let me repeat that. You do not control them. You are trusting a third party, and history has shown that trust can break. Under frameworks like the Dodd-Frank Act, financial institutions are allowed to prioritize their stability over your access. In extreme conditions, withdrawals can be delayed, assets can be frozen, access can be restricted, and by the time you realize it, it's already too late. This is not fear. This is structure, because the system is designed to protect itself first, not you. Which brings us to the most important question. Are you participating in the future, or are you handing it over? Let's move to strategy, because awareness without action is useless. Step 1. Cold storage. Move your core digital assets into private wallets, offline, secure, controlled by you. If you don't hold the keys, you don't hold the asset. Step 2. Long-term allocation. Stop chasing short-term volatility. Institutions are not trading daily noise. They are accumulating long-term positions. Think in years, not days. Step 3. Ignore the noise. Media cycles are designed to trigger emotion, fear, greed, panic. The institutions rely on this. Your edge is discipline. Stay focused on the macro shift, not the daily distraction. The institutions have a plan. The question is, do you? Because the great institutional flip is already happening, and once it's complete, there will be no second entry point. Subscribe to Wealth Report USA and stay on the right side of the flip. This content is for educational purposes only. It is not professional financial advice. Investing involves risk. Always do your own research.